Let's bring in General Motors CFO Paul Jacobson on a morning where GM beats on the top and the bottom line by a wide margin. Paul, I'm looking at the numbers, and it's pretty clear that the strength, it's not entirely because of it, but a good chunk of the reason why you've done so well is the strength of your internal combustion engine business. How have you been able to maintain your pricing that we saw the strength of in the third quarter?
Well, good morning, Phil, and thanks for having us today. It's really a tribute to the men and women of General Motors, from design to engineering to manufacturing to administration. It's really a team effort, but it starts with the quality of the products that we have. We've been in a refresh cycle that I think has kept us ahead of most of our competitors, and you've seen that not just in pricing but in market share and demand for our vehicles, and it's a fun momentum to be a part of.
While you were strong in the U.S., you had another quarter where you struggled in China, a big loss, $137 million. And I think a lot of people look at what's happening in China where you've lost a lot of market share, and they say, is it because the Chinese brands are more aggressive, or is it because the Chinese consumer is just turning away from Western automakers like General Motors?
Well, we knew coming into the year that China was going to be a problem for us. We had a lot of inventory with our joint venture partner. The good news is our retail sales actually picked up in the third quarter, and we've been able to work down that inventory. We're about 50% of where we were at the beginning of the year. So we're making real progress, and we've got a number of meetings with our partner in the fourth quarter. We've talked about needing to make changes to the business, bringing costs down to be competitive in the new market that's there. And we think that we can turn it around.
But to get back to my question, my original question, what's the reason for the loss in share? Is it ultimately the aggressiveness of the Chinese automakers, or is it the Chinese consumer turning away from Western brands, Western automakers like GM?
Well, you know, that's been something that's been going on for a couple of years now as the Chinese consumer has really migrated to new energy vehicles across the board. But when you look at our portfolio, we've got a lot of ICE vehicles over there. We do have a number of good EVs with our partnership with SGM Wuling and the Hongguang Mini EV and others like that. We're also bringing in some premium imports. So while the market has shifted there, there's still a pretty sizable market for us. I think we had just gotten into a point where we had pretty sizable inventory builds that were really causing pricing issues for us, et cetera. So we think that we can adjust the business and work. It might be smaller than it was historically, but something that we can put together and be successful there.
Paul, you had success in the third quarter with EVs, especially EV sales, but you're not fully profitable yet. Yes, you are profitable on a per unit basis, but not fully profitable. When does that happen?
Well, you know, we are making great progress, and as you saw when you were in Spring Hill recently for Investor Day, we've got great infrastructure, not just in our battery cell plants that we've got, where we're the largest producer of cells with our partner LGES here in the United States, but also we've got a lot of flexibility in our assembly line where we can produce ICE and EVs on the same line down there in Spring Hill. So what we've tried to do is really build an infrastructure that's flexible. We know that EV demand is going to have ebbs and flows. We saw it slow down beginning of this year. We obviously saw a pretty big pickup in September. I think some of that was the vehicles that we brought to market. We saw our retail sales were up about 50% in the quarter as we continue to scale. So as we get those scaling benefits and grow into the infrastructure we've built, we've got a really good path to profitability and feel proud of the team for the progress that we're making.